Righty now, so we see Tier 1 Bank, Access Holdings, completed its recapitalization exercise, becoming the first bank to meet the Central Bank of Nigeria's new 500 billion naira recapitalization requirement. The bank raised 351 billion naira through a rights issue oversubscribed by 105.76%, securing regulatory approvals from the CBN and the Securities and Exchange Commission. The funds will boost Access Holdings' share capital to 602.8 billion naira and expand its issued shares to 53.318 billion, with a market capitalization of about 1.32 trillion naira. All right, let's get an outlook now for the bank recapitalization exercise in 2025. Joining us is Damilare Shimi, who's a macro strategist at AfriInvest. Yeah, great to have you. Compliments of the season.
Good morning, Ladi. Glad to be here this morning.
Fantastic.
Compliment of the season to all our viewers across the world.
Thank you so much. So we're seeing, Access Bank now, the first to hit this target. What would you say were the key factors, that contributed to the success of this rights issue? And I'm guessing you might be expecting more, of these targets being hit by most of these banks.
Yeah, thank you once again, Ladi. Let me start by saying that I'm not surprised by this development. The reason is because the Nigerian banking industry have been resilient over the years. This is not the first time the industry will be going through a recapitalization phase. And based on outcome of the previous one, especially the one that took place in 2025, where we had the industry being consolidated from over 89 banks to just about 25, what happened then is largely what is also playing out here, where the industry leaders, the major banks, came off the exercise much stronger. And AfriInvest, being the pioneer of banking industry in Nigeria, have always been tracking that. So this year, when the CBN announced the recapitalization exercise early in March, we have put out a lot of publications to sort of instill confidence in Nigerians that most of the banks will come out very strong from this exercise, notably the players in the Tier 1 categories. And Access Bank have just announced that he has successfully raised about 351 billion, which is slightly above even the minimum baseline it needed to maintain its license authorization. You recall that in March, when the CBN redefined the minimum capital base for banks and non-banks, for the commercial bank, the capital base requirement for them was raised from about 50 billion to 500 billion, just to accommodate or to check the effect of capital erosion that has taken place over the last 20 years now. When the exercise last took place, exchange rate has moved from about 189 in 2005 to about 1,600 now. Inflation in Nigeria over the last 5 years has averaged above 18%. So when you look at those effects, the real value of the capital raised then in 2005 have actually been eroded, and that is what the CBN has pushed the bank to do. So Access Bank have taken the lead, not because they are the only one that have actually successfully raised that amount. Based on our market tracking data, there are also other Tier 1 banks that have also successfully raised capital needed to meet the new requirement for their license authorization. But we think that they are yet to clear their capital raise transaction with SEC. So, but by and large, we believe that, especially from the Tier 1 banks, we believe that the capital raise exercise is just a way of also helping them to boost their capacity to propel this economy. And you recall that one of the essence of this recapitalization exercise, which the CBN put to bear, is that they want the banks to be more stronger, to be able to finance the target of a 1 trillion economy over the next 7 to 8 years. So it's a good news that Access Bank is taking the lead in terms of being the first to announce its capital raise, successful raising of the shortfall capital to meeting the new recapitalization. We look forward to hearing more in the new year as small banks also complete the exercise. And right. For the Tier 2 banks, we are also very optimistic that a sizable number of them will also scale this exercise. And perhaps we might have a few M&A at the end of the day. But by and large, we think the banking sector will come off stronger at the end of this exercise to finance, to drive the economy, to drive sectors across the country to greater heights.
Right. We have the markets, financial markets are open tomorrow. How do you see this news now shaping investor sentiment towards the Access stock?
So interestingly, right, among the banking stocks that we tracked, Access Bank, compared to its peer, the tier one bank, Access Bank is the Access Bank ticker or stock has been the least performer in terms of year-to-date gain. I think the stock has only gained barely about 4%. You have the other tier one tickers that have gained above 30, above 40. So this sort of news should boost investor sentiment towards Access Bank. I will not be surprised to see a significant rally on the stock, because it has instilled more confidence it has instilled more confidence in investor on the ability of the bank. Of course, for anyone that knows the story of Access very well, this is not the first time Access will go through a very challenging situation and come up with something great out of it. You want to talk about critical acquisitions they have done in the past, Intercontinental in 2011, the other bank they acquired in 2018 to strengthen their customer base, which is Diamond Bank. So by and large, Access Bank have a track record of coming up strong, even in challenging situations. And the challenges that the recapitalization exercise posed to all banks in 2024, because after the announcement in March, in Q2, the banking sector was in the red. And thus far, now we have seen the banking sector move down. So with Access Bank announcement of successfully raising the capital needed to drive them in the new era of CBN recapitalization fees, we're optimistic that the stock will see some buying interest in the remaining few trading days of the year, leading into the new year 2025.
Right, and talking about the capital raises so far by majority of the tier one banks and tier two banks, how do you see the raises so far? How they've impacted the Nigerian economy, and how they will impact going forward into 2025?
Well, so let me start by saying that the banks have done well in terms of the capital raise. Based on our estimate as of Q1, when the CBN announcement was made, I think the capital shortfall for the industry was in the region of about 4.2 trillion. And they have 24 months to raise that 4.2 trillion. Just within the space of 7 or 8 months, if we sum up the amount that has been raised, even though some have not come out to declare it official, perhaps because they have not cleared with CBN and SEC, we think the players in the industry have raised close to 2 trillion naira, including the Access Bank. So that tells you that the banks have really strengthened their buffer. Now, in terms of their contribution to the economy, if you look at the trajectory of the GDP in the last 2-3 years, the banking, or let me say the finance and the financial institution sector under the GDP composition have done on average 25% growth. That is more than 7% fold of what even the broader economy is doing. So that means that the finance and insurance sector have been growing very rapidly in terms of their size. Now, in terms of contribution to society, one of the ways of assessing that is looking at what is their loan book looking like. The loan book in the banking industry have risen significantly from barely about 60 trillion about 2 years ago, 3 years ago, to about 140 trillion. So meaning that the banks are actually doing it, significantly in terms of helping to reflate the economy. Because the question you need to ask yourself is that what is the primary role of banks? The primary role of banks is to be a sort of a connector, a bridge between the have and the have-not, in that they help the surplus economic agent to they acquire, they take from the surplus economic agent with the promise of certain interest and make resources available for the deficit economic agent that want to expand productivity, expand capacity. And if you look at the fact that their loan book have grown from about 60 trillion or so at the end of 2022 to about 140 now, you want to agree that the banks are actually pushing, pulling their weight in terms of boosting the economy. And we think that as many of them get to meet the new capital requirement, they will have more ability to do this, to support the general economy. Of course, the current interest rate environment is a bit challenging in terms of cost of borrowing for businesses. But by and large, the banks have the capital to borrow. They have the capital to support sectors, the oil and gas, the manufacturing. We just need inflation to be addressed by the appropriate authority led by the Fiscal Monetary Authority. And then the bank can easily offer credit to people at affordable rates, which will have more multiplier effect on the economy. But by and large, the banks are supporting the economy given what their loan book is showing.
Okay. Well, I guess, going forward into 2025, I hope customers are able to access as much cash, as they need, at the banks. We've seen the whole cash crunch and how the POS agents are, stepping in to give out the cash. And hopefully the ATMs come online, in 2025 and more credit to the private sector. Hopefully, if inflation stays stable. Thank you so much, Damilare Ashimiyu, macro strategist at AfroInvest. Thank you, and compliments of the season.
Thank you, Ladi. Do enjoy the rest of your day.
All right, that's it from me on Biz This Morning. The markets are open tomorrow. We'll give you a summary of what's playing out tomorrow. Hope you're enjoying the holidays. I'm Ladi Williams. I hand things over now to the Sunrise Daily team.